Morning, everyone. I'm Martha Stokes. I'm a chartered market technician. I am retired and I enjoy sharing my ideas and trying to help you understand things from the professional side of the market. The buy side institutions in particular, there are 12 different market participant groups. There's no such thing as Main Street versus Wall Street anymore, and you've got to get some of the stuff that you keep hearing out of your trading so you can make more money, because the more money you make, the stronger the economy and the stronger the stock market and everything else. We are no longer a consumer-based economy. So that's very important to remember, that we are no longer a consumer-based economy. We are a digital financial economy. And so the stock market is critical to learn and how to trade and where to go. We're going to talk about selling short today because we have a lot of angst and anxiety and uncertainties that are going on. And so the market is expressing itself as what I mean by the market is is the indexes. The indexes are showing selling down. It's a panic mode selling. It is instigated by retail investors, retail day traders trying to sell short, and small funds managers either selling short or selling in panic. Small funds managers are 10,000 to 15,000 small, very small businesses, and they're on the YouTube and the internet and TikTok and everywhere else, trying to tell you that they're great and wonderful, and they express themselves as the institutions, and they're not. They're just individual companies. They're small, very, very small, and they have less knowledge about the market than you do, because very few of them actually read stock charts. Today, we're reading the stock chart of MU. I picked this out last night for this conversation, and lo and behold, it's already capping down today. This is a topping formation, and if we look at the weekly chart, we can see that the angle of ascent is way too steep, and the major support level is down here. This should support it. But if the market continues down, it could go below this. Usually when you are doing a sell short situation, I just wanted to show you how severe that angle of ascent was. It's over speculated. It's not over bought or oversold. Get rid of those old ancient words, because they don't work. It's over speculated. Okay. Or over panicked mode. So we have a top formation. Definitely angle of ascent is too steep. It can't sustain it. It's going to report March 18th. So it still hasn't reported. And guess what? Every time we have a big company report, AI from the HFTs is misinterpreting it and finding something negative, and then the stock just runs or gaps down hugely. So be prepared that MU may fall quite a bit. And it's finding support right here. When you are in a sell short position, the support levels are below the consolidation. This is below the consolidation. This is where the support would have been for this little rundown, and it popped back up. Now today it's coming down. This is the support level for this little rundown here, and it is popping up from this minor support level. Here's another very minor support level. It's not very strong. If there's impetus behind this, if we have a lot of people watching the retail news tonight and the market continues to go down, which we don't know yet, but it looks like it's going to go down. The Dow has broken through its sideways trend and is now heading toward its first tier of lower support, which is below the candles, not above it, because we're in a sell mode situation. You don't put it above it. You put it above it when the stock is moving up. You put it below. And this is so critical. This is just ABCs of stock chart analysis. And every time I talk to people, they don't know this stuff. So if the market is running up, you put the support level line below. If the market is going down, if the stock is going down, you put it below. Okay. Because it will crash right through those support levels. It'll crash right through those support levels. Then it goes down and down. This is a moderate support level for a swing trade. And because this would be a swing trade mode up, it wouldn't be a platform position trade. It would have been a platform position trade in here. So you have a stock that it has support levels that can kick in. You also have several factors that you have to understand and realize. We're looking at volume. I'm writing a new volume course right now to explain volume, because volume has changed so dynamically that it's important to have my students understand. But anyways, you have a lot of volume volatility here, really high, and understanding who controls this. The lower volume is often dark pool quiet accumulation, because they're accumulating over time when the small funds managers and retail groups are not doing much. They're on the sidelines. The dark pools footprints show up on the charts, and we've had a lot of days where we've had very little low volume, especially on the indexes. Very, very low volume. We also have the dark pools looking for bargains. They're saying, okay, let the stock fall. I'm not worried about it. We're holding a chunk of shares, but we know it's going to continue up. We're long-term investors. We're protecting the 401ks and the IRAs of the middle class of America. And we tell our long-term holders, we tell our 401k holders and our IRA owners that they should hold until the market drops 20% and further. So they have convinced everybody that has a 401k not to worry about it. So this is mostly independent investors. Some huge majority of it is small funds management, and then retail day traders. If you're a swing trader, you're doing a good job. Day trading is very dangerous. So we place the support level below because it will dig into it. Okay. You want to also know that dark pools are hunting. They're looking for a bargain price stock. Now, right now, is there any fundamental level showing up in here anywhere? No, not really. There is no fundamental level. Here is the last fundamental level for MU. It reports March 18th. So it could potentially, if we get some impetus, we get some real strong panic selling by independent investors and small funds managers and stuff, it could come right through all this mild support. Very mild, this is very weak right in here. It'll come down. And so we have a one at here, and this is, I have put it above for this because this is the strongest support level that is nearby, and it will probably find support here because dark pools were accumulating in here, and so they will set their time weighted at average price, time weighted at price orders that ping on the penny spread, and they have very tight penny spreads. They don't, and they have very low volume. So I know by reading this chart where they were buying before, and they weren't buying in here at all. So the support is down here for this stock. And since they will buy and push it up, I put the line above. So you also have to consider that you also have HFTs, AI, that will gap down a stock as soon as it has any kind of negative retail news, and there's tons of retail negative news this quarter. It's just really a whole lot of it. And it will gap or run down. And then you have pro traders also selling short, hedge funds selling short. So they have a lot of dynamics going on in the market. It's not just Main Street versus Wall Street. If you just keep looking at it that way, it's tragic. A couple of weeks ago, I noticed that sell side institutions were accumulating oil and gas, and I thought that's their favorite thing to accumulate, and because they figure that they know when there's going to be a demand and supplies will run out. So sure enough, here we are, and oil and gas is spiking, and so they're already in the position to sell into it and make a lot of money as it runs up. So we have dynamics going on, we have opportunities going on, but selling short requires 3 times the practice as buying long or swing trading up to the upside, because it is more complex. You also have to place your stop losses sufficiently so they breathe, and you must use stop losses, because the biggest risk of selling short, if you don't know what you're doing, if you do not have a 70 to 90% accuracy rate on the simulator, don't sell short, because what's going to happen is you have to use margin. And if you go in the wrong direction and buy side starts bargain hunting and pushes price up, and you're trying to sell short, you're going to have a huge margin call. You're going to lose a lot of money, and you're going to be very upset with the market. Oh, Wall Street's against me. No, it's not. Nobody's against you. We're all for you. Everybody's for you. The buy side institution wants you to make money in the market. They make money in the market when you make money in the market. Everybody wants you to succeed, except for the pundits who are trying to get you to panic or speculate instead of buying with intelligent decisions. So you have a lot of things that you need to factor in. You have to factor in the buy side institutions. Where are they going to show? Where are the sell side institutions going to start selling short? How is this is already moving up? So we have some um, what we see right here is we see that this stock is being supported by corporate buybacks today, and it should hold here for a little bit, but it's tomorrow is another big question because we have a lot of going on. I'm past my time, and I will continue giving some explanations on sell short if it continues down. So trade wisely, learn to read the charts, learn to interpret where each market participant group is and who is in control of price, and be careful. Practice. If you aren't good at selling short, practice it on your simulator now, because this is your big opportunity to practice it a whole lot. I'm Martha Stokes, and that's the topic for today.